Taking a look at today's interest rate markets, let's look at the 10-year note futures today as they're realizing some further selling pressure today. We're seeing them down now for a fifth consecutive session. And today's price action has now pushed them into the middle of the 133 handle, 133.18 right now. So we continue to see, this selling pressure being realized as there's a lot of moving parts in the market as we go in and move towards some inflation data. It's coming up here in the next couple of days, particularly tomorrow, CPI data. So the market's in high anticipation of that number coming out. And when you look at some of the other factors, I think, or some of the other reasons why we're seeing this selling pressure, I think there's a couple things. Primarily today, I think the thing that's contributing to, again, the realization is the infrastructure bill getting passed, making its way through Congress. And so I think that that's perceived as potential for economic expansion here in the U.S. and therefore putting a little bit of pressure on the interest rate markets. Also, Fed speak. We did get a fair amount of Fed speak earlier in the week, and I think the market's still digesting that. And they basically are indicating, some of the Fed governors or the regional presidents are indicating that, if the jobs creation continues on the path that it's currently on, if it maintains that elevated state, I guess, and we see some of these other things continue to unfold, and the COVID variant situation doesn't have too significant impact, that there's the possibility that we could see the idea of maybe thinking, I guess, about tapering or possibly announcing some type of liquidity provisions where they'd rein those in a little bit as we moved into 2022. And so the market seems to be adjusting for that as well. And when you look at the yields on the 10-year, 134 basis points, which is that's the highest yield in about 3.5 weeks now. So we are seeing the 10-year again selling off and yields bouncing back here to a range that they have not been trading in for almost a month now. And it's interesting today, the other dynamic today I find interesting, when you look at the yield curve as a whole, it's really the 3s, the 5s, the 7s, and the 10s that are realizing the largest percentage shift as far as yield. Therefore, they are selling off more so than the front end of the curve. But also, even when you look at the 20s and 30s, they are not selling off as hard today as the middle of the curve. So therefore, the 10-year note is realizing a significant amount of the selling pressure today, which has pushed those yields up to 134 basis points.